Hi, like Greg said, I'm BJ Lackland. I'm the CEO of Lighter Capital, and I'm pleased to be here today with Molly Otter, our Chief Investment Officer. Lighter Capital is an online commercial lender focused on providing small businesses with up to $500,000 for up to 5 years. Our mission is to use technology and novel financial products to remake the small business lending market. Traditionally, lenders have used historical information like FICO scores and financial statements to make decisions about lending. In other words, they've bet on the future by looking at the past. They're driving a car by looking at the rearview mirror. It's scary and understandably slow. At Lighter Capital, we want to look through the windshield. We want to drive forward boldly. We want to know the future. To do that, we're proud to announce today to be the first online lending platform to incorporate customer relationship management data from Salesforce.com. CRM data drives our borrowers' decisions. So shouldn't it drive our lending decisions? We think so. And we think all commercial lenders in the future should be using CRM data. In our demonstration, a borrower has already gone online and filled out an application. In the process, they've logged into their LinkedIn account, their bank account, their QuickBooks account, and their Salesforce CRM account. What you're going to see here is the internal view that we see as a lender. This is exactly the way we see every loan application that comes in, except in this situation, the name of the company has changed to Vanilla Ice. On the left-hand side, we have our pipeline of deals that have come in, rated by initial score credit rating. On the right-hand side, we have all different kinds of actions we can take on any loan, from assigning tasks to making comments to automatically sending emails to even automatically creating a term sheet and sending it to the company. On the top navigation, we have financial inputs, we have team inputs from LinkedIn analysis, recommendations, social media, etc. In the center, we have general information about the company. Who they are, what they do, why they want money, what are they going to use it for. Let's dive first into the financial information. This information is understandably mostly from QuickBooks and Yodlee. So at the top here, we've got a highly condensed income statement and balance sheet. As we scroll down a little bit, we've broken the major components, basically revenue, expenses, and the balance sheet, into graphs. And we can go into any one of these lines and drill in. So this is the expenses. It shows here the expenses by department. Yellow is sales and marketing, so apparently they're spending some money there. Further down, we incorporate Yodlee data about their bank accounts. Looks like the bank account for Vanilla Ice is starting to go down, down, down. So it's no wonder they're coming to us to look for funding. Next, we're going to go back to the main page and start diving into the CRM data. This is where we as a lender switch from looking at the past and turn our eyes toward the future. So here you see the core of our CRM data. Up top, there's some tabular data. We've calculated certain figures and incorporated certain key data points. Below, we've got a graph. This graph shows in black the history of new leads for this company, the history of new opportunities in blue, and the history of closed-won opportunities in green. Basically, that's booked sales. Up above, we've calculated things like the average sales cycle. It turns out the average sales cycle for Vanilla Ice is 5.4 months. It's not bad for a B2B SaaS company, which Vanilla Ice is, but it's not that great. However, we've also looked at the conversion rate. The conversion rate, we call, is the conversion from leads into closed sales. Vanilla Ice has a conversion rate of 52%. That's pretty incredible. They touch somebody, it takes them a while to buy, but eventually they buy. They also have incredibly accelerating leads. Their leads are up 300% year over year. Now we're going to scroll up and look at our summary graph data. This is where we really try and encapsulate our entire picture of the past and the future of this company in one graph. So we're going to click off these lines, and we'll show you from the get-go. The first red line is their historical expenses. The next line is blue, and it's their historical revenues. The third line is orange, and that's their history of closed-won sales, their booked sales. Now, what do we see here? We see that Vanilla Ice is clearly losing money. So not surprising, their balance sheet is also going down. But their sales are ramping up really quickly, and their expenses are kind of moderately flat. So as a lender, what can we do with that? Can we lend to them or not? A typical bank, there's no way they could because they're losing too much money. But the key real question here is incorporating future data. If we incorporate future data, we can tell you whether the blue and the red lines are going to cross, ultimately. So to do that, we first start looking at a yellow line. The yellow line is the sales team at Vanilla Ice's opportunities and pipeline. It's what the sales team expects to close for opportunities. And not a big shocker, the sales team is ridiculously optimistic. Nice big hockey stick. The next line is a green line. The green line is a proprietary calculation that we perform that munges together kind of the leads and the sales cycle and a whole bunch of things to pull out of their CRM system what we believe the CRM system says should fairly be their sales. The next line is a blue line. This is truly our composite figure for what their revenue is going to be. It incorporates all the data we can pull in that has any implication on revenue, historical, future, etc. The last line is their expenses, of course, and it's good to see, hey, Vanilla Ice is going to make some money. So from a lending decision, this is a good situation. Vanilla Ice actually looks like they're pretty good credit risk. We can quickly give them a score, underwrite this loan, and fund them. In summary, traditional lenders use historical information. Even other online lenders use historical information. But they're betting on the future by looking at the past. At Lighter Capital, we incorporate CRM data to be able to peer into the future, to know our customers better, and to be able to underwrite more loans. We believe it's the future of commercial lending. Thanks for your time, and come back and see us at the booth if you'd like to know more.